Hi there, Serial Trader here. Do a little market update here, starting with the hourly chart on SPX. Now, since my weekend video, we have taken out that level at 28.79.22. Although not a significant amount of follow through after doing that. You can see we gapped up today, made an intraday high of 29.21.15, and then we faded that high and closed near the lows of the day and closed down for the day. So potential reversal there. I still like this as a 5-3-5 sequence to the upside. Now this C wave of possibly this larger X has certainly drifted on, not so much in price but in time. You can see basically today the AC equality relationship, 28.92, and then the 618 retracement of the entire move down from the all-time high to the March lows. That 618 relationship came in at just above where we made our peak today by about 10 points or so. So right between the AC equality and 618 retracement is where we so far have found a nice pivot. And if it just continues trending down from here, then that's a pretty high confidence zone for us to really reverse hard from. But if that level gets taken out, then we can continue going higher. And there's just not enough downside here to have some confidence, some confirmation as of yet. But just looking at the subdivisions here of this wave C, so this fight still got our 1 up, 2 down. Now I was earlier thinking that this was 3, 4. We had our ending diagonal 5, and then we were starting our decline here, but the market has proven that wrong. So now my next best assessment is we still got 1, 2. This is all of 3, and within 3 we had an ending diagonal 5th of 3, so 5 of 3. This was our actual 4th wave. And then, I mean, you can kind of make the case here. Let's see, even just on this hourly chart without going in for further detail, you got a potential, let me get the impulse wave tool out. You got a potential 1, 2, 3, 4, and then possibly putting in our 5th wave. Let's see here. Putting in our 5th wave peak today of the 5th. Possible. I'm not overly convinced yet that we have the actual peak in, but certainly entertaining that possibility. You can certainly count it as complete, although you need more confirmation to really embrace that. So that's what I'm working there. If we do take out, for me, pretty good confirmation would be taking out this low here. And let's see, that's at 27.27. Take out 27.27, and I'd say any bounce after you take that out is probably a shortable bounce. I did get stopped out of that short futures position, and I have not re-entered it yet. Still holding the SPX July puts. But what I kind of like to see here is something along these lines. If this is what we're going to do. Now, it depends if it sets up like this or not. This is just something to look for. Not saying it'll necessarily happen like this, but it could. So basically looking for our first 5 down, take out that previous support level, get a bounce up that looks like a 3-wave correction. That'll be the next potential setup for shorting futures for me. For now, I'll just continue holding those puts. And if this thing just starts tanking and doesn't give any kind of reasonable corrective balance to get in, at least I got the puts, right? So that's basically what I'm looking for there. Not overly convincing when you break out like that, gap up, and then just immediately reject and come back. So kind of like that we might have a top in place, but too early to really say with a high degree of confidence. But currently, this is kind of my best running wave count here, subject to change, of course. Okay, now on the Thinkorswim candlestick chart, some things to point out, potentially of a reversal. So this is a dark cloud cover candle where you open up above the previous candle and then close not below the previous candle's open, but well into the real body. So that's a dark cloud cover. If we'd close below the open of that prior candle, we would have a bearish engulfing candlestick, which would be more powerful. We do have one on the NASDAQ, and I'll get to that. But for now, potential dark cloud cover reversal candle. Obviously, if we continue trending down tomorrow, start closing below this daily T line, that will be a good sign that we really have the pivot in place. But for now, just a potential reversal awaiting confirmation. Now that's on SPX. Oh, and we did fill this gap over here. So that's another potential reason to believe that might have been the peak, right? So that gap got filled at 29.0154. We've certainly filled that. So that's looking good. We are actually getting towards the end of the month, and often you see pretty good pivots towards the end of a month or the beginning of a new month. So we have that kind of little timing nuance going for us as well. Another timing thing. Hang on there. Okay, so I've put on a timing thing here. So basically the entire length of time that this decline took, projected out, and this is just the equal amount of time. So we're a little bit past that equality point. Equal amount of time would have been on the 24th of April. We're now 2 bars past that, potentially to make our peak here. So you want proportion is basically all the timing aspect is trying to get at. It doesn't have to be bang on. Sometimes it's bang on. But in this case, we're roughly equal, slightly higher as far as time elapsed compared to this initial wave down. Now our reaction wave up has elapsed a similar amount of time. So that's a nice thing to look for. Not necessarily exact, but you can see what I did there. Just taking that overall time elapsed in that first wave down, projected out here, and this gives us an area potentially to look at for the termination of this reaction wave up. Anyway, that's all I want to point out. Okay, that's SPX. Dow Jones Industrial Average. Not quite as strong a reversal today, but nonetheless a rejection of that gap up and still closed down for the day. So that is something. But what I really want to point out here is the NASDAQ composite. And we had a nice big bearish engulfing candlestick after a doji star yesterday. So that's considered a bearish left-right combo where you have that doji and then a big bearish engulfing candlestick, obviously fully engulfing that doji. So this is a strong sell signal awaiting confirmation. So if the NASDAQ can keep tanking tomorrow, and ideally the rest of the week, and start closing below the T-line, and this channel that we've been in here, this corrective price channel, if we can start closing outside of that channel here on the daily chart, that'll be a higher confidence situation as far as the top being in place and expecting further lower prices, right? So a nice sell signal on the NASDAQ. That's probably the strongest message I saw today in the overall market, was that big bearish engulfing on the NASDAQ composite. So just keep your eye on that. And on the VIX, potential reversal day on the VIX, nothing extreme. A little doji star on the VIX, closed up modestly after being down intraday. So the VIX, not really showing much yet. Possible reversal though with the doji star. And VXX, looking for potentially a kind of double bottom play here. Let's see, this actual low on VXX was 37. Today went as low as 36.96. So potential for a double bottom on VXX. Obviously, we need confirmation. We need to start just surging out of here for that to be valid. But we're still below that blue moving average there. So VXX definitely needs confirmation. Right now, it's just that potential double bottom. And okay, we'll go to the VIX VVIX tool. And we do have a little divergence here. So today VIX just intraday made a new low on that gap up open. VVIX did not. VVIX made its low, I believe, in yesterday's session. So you do have a divergence between VIX and VVIX. VVIX made a higher low. VIX made a lower low. So you got that. We do need VVIX to get above the red moving average. which is currently just threatening to do but has not done yet. And then, of course, we need SPX to start going below that blue moving average to get a confirmed sell signal. Not there yet, but potentially setting up. And that's all I really want to go through there. All right, so tomorrow, if we can get a nice bearish day and close below the the daily T line, obviously not take out today's high, then we might be onto something here as far as getting our next larger wave down. And if not, then there's still some higher levels we could potentially go to and find resistance at. 200-day simple moving average is still up there, currently just around 3,000, 3,006. And then, of course, this gap up here, unfilled still on SPX, would be at 29.9983 to fill it, so around 3,000. Again, that's only if we break today's high. If today's high can stand and we can start trending down, then this could be it. So keep your eyes on the market. Fairly important week. Lots of big earnings reports coming out. I think there's a Fed meeting. I think there's some GDP report coming out or something. We're closing out the month this week, the trading month. So various things coming together, both technical and fundamental, to potentially give us a nice pivot and start our wave down. Maybe basically we got a real nasty move down for most of March. April was our recovery month, and then perhaps the next leg down will be into May. We'll have to see if it works out like that. All right, that's good for now. Serial Trader signing off.